How is the pandemic impact, and how are these relationships between Beijing and Washington, which of course have been on a downward spiral for a couple of years, how is that affecting deal activities? Do you see it now?
Yeah, thanks, Tom. We see little impact on the existing deals in the pipeline, and we actually got quite a few inbound deals, including deals from U.S. investors into China, which will be signed or closed very soon. And those deals are investments into sectors in China, including consumers, auto, and logistics. I think the investment rationale is driven by the proximity to the Chinese market, because all of the investments they will produce products targeting the Chinese market. But for outbound M&A activities from China, some deals are put on hold due to COVID-19 because of the travel restrictions, and also because of the various restrictions imposed by the U.S. government targeting Chinese investments in the U.S. And looking forward, there are less deals in the pipeline on the market than ideal, because we are in an unfortunate and challenging time where we're facing a combination of the effects of COVID-19 and also the growing friction between the two largest economies in the world, and people are facing uncertainties and hesitate to make important decisions. In terms of the trend, from a corporate lawyer's perspective, that there will be more restricting opportunities for Chinese companies as they complete their investments outside of China, and as China opens up, there will be more domestic M&A activities in China. Because it's more difficult to get listed in the U.S., because the bill just passed in the Senate, we see that GDR listing in London through Shanghai London Stock Connect may become more popular. And as far as we know, there are already around 20 companies queuing up for the GDR listing in London.
So maybe some upside there for the UK. In terms of outbound investment, I mean, Chinese corporates used to be such a powerful force globally. And of course, you're talking about those restrictions in the US, but also anxieties in Europe. Asset prices are cheap, though. So where are Chinese corporates looking to take advantage of that?
Yeah, well, there are a couple of deals put on hold, but the investors decided to go for the deal because of the market crash to take advantage of the reduced valuation. But also for the same reason, the seller decided not to sell the shares at this moment, as they feel that the share price may rebound.
Richard, it's Yvonne in Hong Kong. Thanks so much for joining us. On the back of that, though, we're hearing countries like Europe and the U.S. raising concerns about companies could be vulnerable to Chinese takeover attempts. They're saying that they're using subsidies basically to look for bargains and then taking technology out of these companies. Are those concerns warranted, you think?
Yeah, well, I think it's a good question. And, well, not only U.S. and in Europe, countries are putting in place restrictions aiming at preventing undervalued acquisition of national champions by Chinese companies. And as far as we know, even amid COVID-19, lots of Chinese companies, including domestic PE houses, and they are running research into possible acquisitions in U.S. and in the Europe of interesting assets. So people are making plans, but people may not make the move because of the restrictions put in place by the government. So once the restriction is lifted to some extent, I believe there will be a huge increase in the deal volume out of China into places like Europe and possibly U.S.
And what sort of interest are you seeing in M&A domestically? You mentioned that there's a little bit more of that activity now. Is this more of a temporary thing, you think, or more of a permanent trend?
I think that's going to be a permanent trend because of all the challenges outside of China. I think the businesses are are starting to look inward into the domestic market. So there are actually lots of transactions in the automotive and the financial services sector, and also the biotech sector in China.
And tell us
Richard,
how
in terms of the financial sector opening,
go ahead.
Richard, in terms of the financial sector opening that we're seeing here in the mainland, to what extent is that empowering some onshore investment? We've seen, of course, the investment banks, the big Wall Street banks, expanding their footprint here. Is that creating a lot of additional activity?
Yeah, well, as they grow localized, and they were trying to compete with local players on the market, so they're developing their own financial and wealth management products, for example, to make themselves more competitive. And we have spoken recently with quite a few clients ourselves, being financial institutions, having presence in China, and they overall remain very positive about China, despite the friction between U.S. And China. And China is pretty determined to open up the financial market, and so there will be more new regulations coming up to attract more foreign investments. Just to give you an example, in April, there's a 30-point plan issued by quite a number of government departments providing government policy support for financial services sector in the so-called Greater Bay Area close to Hong Kong. So there are quite a few interesting developments, including allowing residents in the Bay Area to build up cross-border financial investment portfolio through investment in wealth management products sold by Hong Kong and the Macau Bank, and also a policy to allow qualified overseas investment to investors to participate in carbon emission trading in China. So I think the more interesting reforms will be coming on the way, and the government will further open up the market.